Hey, what's going on, guys? It's Sal Bossio with Mortgage Universe, where real deals get done. But anyway, so another thing that I want to talk about was regarding the home itself. And let's just say you have your eyes on this home and you think it's bringing in, we determine it's going to bring in $2,000 a month. Again, I'm just using this as an example, $2,000 a month. The appraiser goes out there and the home value looks great, comes back as what we thought, but he determines that the market rent is lower than what we anticipated. Now, sometimes this becomes a problem, and sometimes it's not so much of a problem because there are lenders that will offer different ways to do this. Now, this would be called a low ratio loan. So let's just say the rent we thought was $2,000. The mortgage is $2,000, including your tax insurance, your principal, interest, tax, and insurance, and also the HOA. Let's just say it's just at $2,000, but the market rent comes in at $1,800, right? So what we're gonna do is we're gonna take $1,800 divided by 2,000, right? Wait, 1,800 divided by 2,000, and we see that that's obviously just below. It's about a 0.9% ratio. So now we're what's called a low ratio. Some lenders are not cool with this. They'll deny the loan, and the good thing about working with someone like me, a broker who has access to over 200 lenders, is we can always move it if we have to a different lender. However, a lot of these lenders understand the market and will have low ratio DSCR loans. Now, the only caveat to that is the interest rate is going to come up because it's a riskier loan, it's a low ratio. So as long as, I always prepare my borrowers when I'm talking about this stuff, like, hey, this is where we think the rent's going to be. Now, for some reason, the appraiser can go out there and tell us that the rent is lower than what we thought, and therefore it becomes a low ratio loan, and we'll have to, there'll be a rate adjustment, there'll be a cost adjustment on that. So we need to be prepared for that. So as long as as long as I set expectations, I actually haven't had that happen in a very long time because I'm normally pretty good with determining the market rent, and I always go conservative anyway. Typically what I'll do is I'll go conservative on the market rent. I'll ask around, we'll ask the realtor, we'll make sure that we're borderline, where we need to be, and then I'll estimate high on taxes and I'll estimate high on insurance just to be safe. Not taxes, I'm sorry. I'll estimate high on insurance, and I already know what the taxes are because it's a public record. And then we'll look at the HOA if there is any, but if it comes in low, you just got to expect the ratio to come up a little bit, or the rate to come up a little bit. And then there are situations where we offer no ratio loans as well. So if the market rent is really low, it's a house that you really love and wanna, you believe in, and you think that there's potential in it, there are lenders that will do no ratio loans. So in this case, those rates are going to be even higher because they're even riskier. But the point that I'm trying to make here is there's all sorts of options to help you purchase real estate, and it's a lot easier to do than you would think because of the way that you're used to getting approved for a loan. It's really nothing like that. Actually, I do want to also mention this loan can also work for 1 to 4 unit properties. So if you have your eyes on a multifamily unit, these are great products. You just can't live in any of the units to do it. These work for, I have lenders that will do 5 to 10 units, 10 plus units. So it doesn't have to just be a single family. Now, typically with those, they do want you to put a little bit more down. 25% is usually the minimum on something like that. 30% is even better. You'll get better terms, but it doesn't just work for single family for single family residents either. So I just wanted to mention that as well. So long story short, if you're trying to build a real estate portfolio and you don't know where to begin, this could be a great product for you, as long as you especially if you have at least a 680. I mean, especially if you have a 700 credit score. 700 is really where you want to be for great terms. 740, honestly, but we can do these as low as a 620 score in certain situations. So don't feel discouraged. I would be happy to talk with you about this, and if you have an idea or if you see a property that you're interested in, send me a text, fill out my app, set up a call with the link below, And this is something that we can do together and figure out if it makes sense. We're gonna wrap this up. DSCR loans are really all about the property, not you. If the rent covers the payment, you got a strong shot at getting approved. Yeah, and if you want to see if a DSCR loan is right for your next deal, reach out and I'd love to have a conversation with you. Once again, I'm Sal Bossio. This is Mortgage Universe, where real deals get done. And just want to thank you so much for watching this video. Please don't forget to like and subscribe to it if you like the content. And please don't hesitate to share it if you know any other investors that are interested in learning more about DSCR loans.